Eric Muadhi, Muadhi.com, for the weekend of February 6th and February 7th, 2016. Let's take a look at markets here. We're essentially trading at the lows of the day with about 1 hour to go before the close of Friday's session. This is how the US markets are shaping up to close the week. Maybe we'll see where we close, but for now this is how markets are trading with about 1 hour to go before the close of Friday's session. Now, before I go into the analysis, let's take a look at the 30-minute chart for the Nasdaq. And you can see here what is at threat on the 30-minute chart. This needs to hold short term. Otherwise, if it doesn't hold, then we see another spike to the downside. But if it holds, then around here, don't be too surprised to see short term market coming off the day lows. We can, and I'll come back to this here in a second. S&P 500, SPX. Also, we can see that SPX, if you take the RSI line on the 30-minute chart, extend it out, you can see right now this is what is at stake. If the market holds here short term, we don't close at the lows of the day where it's trading right now. Maybe we even bounce. Unfortunately, if you are long, if the market does break this into the final hour, then that's going to suggest lower prices into the close. Let's take a look at the Dow. And the Dow also showing at the lows of the day, we are still seeing a nice, let's draw a line like that. And this line is still coming into play right now. So depending on how we hold or not, if we hold, then the market closes well off the current lows. And if we cannot hold and we break through that, the risk is that by the time you're watching this video, markets are going to be substantially lower. So again, all this taking place with markets trading at those levels. So either we hold and have a relatively small bounce into the close, or maybe we crack through those 30-minute charts and we have a substantial drop. Okay, so let's go back and take a look at the Nasdaq. And we take a look at the Nasdaq from a, let's go to the daily. And so the daily here. And what we are looking at here at the moment is we are breaking below fresh 52-week weekly closing lows, below the recent weekly closing low there. So that's a fresh break. And keep in mind, a couple of weeks ago we talked about the fact that since the Nasdaq had spent a couple of days, maybe a week or so, below 30.9, chances were very high that it would have to come and test its lows. Same thing happened here. It spent a couple of days below 30.9, which is here, and it did have an attempt to test the daily closing low there. So this is consistent with what we were expecting. If you take a look at the Nasdaq from the previous analysis, we had been watching this line here. This line here was the break signal coming off December, end of December. We come back, we tagged this as of last week, I believe, and we were expecting a pullback off that resistance. That's what we are getting right now, even though it hasn't been a straight shot to the downside. And we can also see, you can also look at this as a break of this level here. That break, if you extend it out, you see that this is also exactly where the market is coming and hit that level, and now we are seeing a pullback. If we take a look at the Nasdaq daily, take a look at the highs there in December and the highs here for late January, we can see that corresponds with two areas of resistance. On the main MACD, it failed to move above that zero line at the end of December. Also uniform activity rejection on the MACD setting here, and also uniform activity rejection at zero on this MACD. So the MACDs have also been telegraphing a market that is still weak, in my opinion, and until the MACDs can reclaim above 50, it's going to be a while before the market can truly have a chance of moving higher. If we take a look at the Nasdaq, at the end of last week, we discussed the idea that after 2 weeks of rest, since making the lows of January on a weekly closing basis for the Nasdaq, that was 4488.42, which is January's weekly closing low. We had a 2-week rally. So now this is a fresh break, which means that the odds are stacked to the downside as long as the market is still below 4488.42 on the Nasdaq. So this is a fresh break after 2 weeks of rest. Again, the risk here continues to be for lower prices. If you take a look at a multi-year weekly chart, so let's take a look at a 5-year weekly. What's at stake? is whether or not the Nasdaq can hold above what has been support line on a weekly chart. So this is 5 years weekly, and you can see off the lows of late 2011, the market's been bouncing on this green line successfully. This is where one had to have gone long the market after a pullback. All this was support on the green line. Perfect re-entry. Even here, held the green line for the lows there. And now we are coming back and we are trading below that. And more importantly, it seems like the green line could be acting as a sell signal because the market has not recaptured the level back above that level. So maybe we are looking at a market that is behaving different. Also, the argument against the market goes because we are breaking this support line. And you can see even that line is coming back to test the same level here, which is resistance now on those two lines. So maybe net we can see that the market here is actually looking very bearish. Keep in mind that we have a bearish crossover here between the 13-week moving average and the 34-week moving average. Bearish crossover tends to suggest that in the coming weeks and months, prices should be seeing lower prices, just like we had a bullish crossover here in late 2012, and we had a nice run in the market. So now we are seeing crossover here between the moving averages on the weekly, suggesting that this market has a lot of work to do to repair recent damage. If you take a look at the Dow, we see that the Dow is coming back also to test the previous RSI support line. Should be somewhere around there. So this has been nice entry off the lows of 2011. Nice support here. So let's just go and take a look at what has been working over the last couple of years. And even re-entry there back above the green line for a nice multi-week rally. Now looks like this could become resistance. So if this is resistance short term, the market is still pointing down. And so there's an argument here that this market has completely changed its makeup, and net over time in the coming weeks and months should actually be seeing lower prices. Take a look at the 10-week moving average, and we see here that the 10-week moving average is trading at 52-week lows. That suggests that prices are going to have to make 52-week lows. So generally speaking, whenever you see the 10-week moving average make a fresh 52-week low, it suggests that on average the prices themselves are also going to have to make a fresh 52-week low, which means for the Dow they're going to have to trade below last year's 2015's intraday lows of about, let's see that, about 15,400. So that's now in the cards here. The fact that the 10-week moving average is at 52-week lows, the market now has a chance also over time to see lower prices so that it can also record its fresh 52-week lows at some point, and that's the risk. Now, unlike the Nasdaq, for the Dow is holding above the previous recent weekly closing low. The level to watch there for the Dow is 15. So 15,988.08. So right now it's holding above that, which is good. Otherwise, if it goes on to break that, that would be also another fresh sell signal. But for now it's holding, which is okay. That's what you want to see if you're a bull. If you take a look at about a 3-year weekly for the Dow, and if you consider this breakout in 2013, so this breakout here, so a nice entry. Since then, market has been using that level for support. So you can see it came back, tested it, did not close below that level, came back here, held above it, came all the way back intraday, but did not close below it. And now we've come back intraday, but we haven't closed below that green level on a weekly closing basis. So this is good support, one can say, that the market is showing right now. So support here, and support here. So the Dow has yet to break down significantly, and anybody looking for some signs of market showing any type of stability, here's an example of where the market is acting very well. If we take a look at the daily for the Dow, we can see it came back and was testing the same line we've been talking about, and clearly we can see here double top resistance with a backtest failure here and then again here. That's one view. The other view is just like the Nasdaq. Let's do this quickly here. We broke, so the breakdown late last year took place there, so we draw a line from there. You can see again double top resistance. So there was nowhere the market at the highs of this week that the market was going anywhere because of that resistance there. If we take a look at the MACD, we can see that the MACD is coming back to test a level where it has been stalling on the secondary MACD setting. So somewhere around here, you can see that this has been a problem in late December, and also now we are coming back there. Depending on what takes place over the next couple of weeks, anything back below that on the daily suggests that markets are still looking at downside pressure. The more we stay below zero, the more we struggle. At the highs for the week, here and here for the Dow, the market was coming back to test the topside resistance on the hourly RSI. Anybody who was watching that knew that was going to be resistance area. And we can also see that coincided very well with the previous breakpoint. This breakpoint was the break in the RSI on the hourly off the highs of December or late December. Here I'm using RSI period of 26. And we can see that at the highs of the week, the market hit that level and then again there. And so coming back off those highs, we are now, even if you take a look at the hourly, it's a little bit of a slight support that the market is doing its best to hold together. If you draw a line like that, you can see right now there's a slight support there on the hourly, which is bringing the market off the lows of the high before the last trading hour of the week. Let's take a look at the Dow Transports on a daily chart, and we can see that it is down about 1.7%. No surprise, because it's coming back to test this backtest line here, which was also a problem in late December here for the highs there, coming back and failing again, suggesting that even day to day we are still showing that the Dow Transport is now pointing down. We also see that it came back to test the break line in late December, so this break in the RSI trend here brought the market off the highs of early December actually. And now if we draw a line from there, which happens to be around the 50 RSI level on the daily, we are also showing another resistance there. So as long as we are trading below the red line, net we are looking at Dow Transports now with a swing trade possibility to the downside. Take a look at the hourly for the transports, and they also gave us a sell signal at the highs of the week. If you draw a line connecting RSI highs, we hit that level twice and could not hold above that. So the market came off the highs there. And there's also another line, which is line around there, which is where it's been stalling going back a couple of weeks. And so it came back and hit that red line. And again, we are seeing the pullback. So all these pullbacks do make sense, even though the market was looking like it was breaking out of a range. If you take a look at what happened early on in the week or during the week, it looked like the market was breaking out if you are watching the price. So price can be a little bit deceiving sometimes, even though price was breaking out in truth. So there was a breakout in price, but in truth the RSI was coming back to resistance, and that's why some of us were skeptical at the highs of the week. And now we are seeing why, because now the market is pulling back. Now don't forget, here what is at stake here is the fact that we are trading at 3-year lows. We continue to trade at 3-year lows on the MACDs for the Dow Transports, and also the RSI is very close to going back to being at 3-year lows. And what's at stake, I'll show you. If you go back about 8 years on the Dow Transports, so let's do that. Let me show you what at stake right now is. We see this entry here, this movement in early 2009. So that move there began a nice leg in the market off the levels here. Market would go on to record a nice run. So if we take and draw a line around there, this is where the market is trying to decide whether it wants to hold that line or not. The last time we came close to testing that green line, the market held and we went on a nice rally, and now we are coming back. We are deciding whether we can hold above that green line or not. And I think that's a big story here. If we hold, then there's a reason to expect the markets eventually to recover. Unfortunately, if we don't hold, the risk continues to be for lower prices. So there's a lot at stake, in my opinion, based off the lows on the entry of 2009. In fact, if you go back about 13 years, let's go back about 13 years on the Dow Transports, show you another view. Same line coming into play. In fact, let's go back. Let's go back to 1990. So give me a second here. Let's go back here. So 26 years worth of data on this chart. And I'm just going to draw the same line here, which was a nice entry in 09. So let's backtest this green line, go backwards. And we can see coming off lows of, let's do that again. So coming off the lows of 1990 was a nice entry there. It hit there in 95, 94. It came and touched this level here in 2000 for lows there. It touched here in 2001 for the lows here. And then double bottom support for the actual lows of 2003. And then of course we see here uniform activity below the green line and back above it for the lows of 2009. And so what's at stake is we need to hold here if we are going to get another reason for the market to move higher. This is where it's been holding over the last 26 years or so on this chart. Otherwise, if we don't hold for now, we are going to see a substantial pullback. So that's what's at stake in my opinion. If we take a look at the S&P 500, the level to watch here is 1880.33. This is the lowest weekly closing low going back to 2014. So going back all the way since this breakout. Oh, let me draw that again. So going back all the way since the breakout here. And since then, this is the lowest close. So the market's been using this for nice support. It held here, held there. It held here intraday or intra-week and held again here. But so watch 18.80.33 because anything moving back below that level like it's doing right now at 1875, that's a fresh break. The risk still remains to be to the downside. So failure to hold above 18.80, which is the lowest close in the last 2 years or so, just opens the idea and the odds for the markets to continue probing much lower prices. If we take a look at the VIX, the level to watch for very strong breakout possibility. If it happens, gotta be very careful. You don't want to be long because the spike in the VIX would mean the market is spiking down. And on the monthly, the level to watch is 28.43. Anything above 28.43, and you pretty much should be out of the market by then because this would suggest a very strong breakout. And also on the weekly, just something to watch also is if it moves above 23. So here on the VIX, on the weekly, 28.03 is the previous recent. So 28.03 is a recent weekly closing high there. Any breakout above that would suggest that the market is now under tremendous downside pressure. Now, if you take a look at the hourly for the VIX, you can see that before it moves any higher, it needs to take out this resistance level on the hourly. So the hourly on the VIX is showing resistance, and until we can clear that resistance or those two lines, I think the VIX could stall. The market could come off current level. So this is where I think short term we can take a look at and see what's happening. Any breakout above this resistance line, any breakout there would now actually mean that the VIX has cleared short-term resistance and might continue moving higher, which means the market goes higher. Otherwise, if the VIX cannot move above this line of resistance here, then maybe the market is going to find some much needed support. So a breakout above this level and your markets are going to be pressing much lower in the short term. So with about 20 minutes to go before the close here, let's take a look at those 30-minute charts I promised you would come and take a look at to see how markets are responding. So short term, as we end the week and as we probably look to start the new week, this is where markets need to show support by holding on this lows line on the S&P 500. If it can hold short term, that might suggest that the market is stopping to go down around current levels. Also on the let's take a look at the Dow or the Nasdaq. The Nasdaq 30-minute chart, it also needs to hold RSI lows line. Otherwise, if it breaks through that, that's going to suggest that it is even getting worse. Let's take a look at the Dow. And on the 30-minute chart for the Dow, you can see that there's evidence that this could hold and stem the recent day-to-day slide. So if this holds, maybe the next swing trade on a day-to-day basis is for the market to move higher. Otherwise, we still see resistance on the top side. So maybe we are stuck in a range. Either top side, there's resistance, and as of right now, on the bottom side, there's support. So eventually, if we can break out above that, that would be good for market bulls. If we break below that, that's going to be good for market bears. So in conclusion, the risk here is that the market continues pushing low on the monthly for the Dow being below 2015's monthly closing low. The level to watch there is 16,284.70. As long as it's trading below that threshold, then the risk continues to be for much lower prices. RSI is trading at 3-year lows, and as long as that's the case, the risk continues to be down until the market can recapture that level. And we can see that the MACDs continue to be trading at 3-year lows, which is a major sell signal. So the risk is still to the downside on the monthly charts. That's the Dow. Let's take a look at the Nasdaq. And the Nasdaq is trading substantially below its 2015 monthly closing low. And that's a major risk here for lower prices. The Nasdaq needed to hold above 4620, but it's cracking through that. And so now we are looking at the possibility that this is going to be a net big down month. Why? Because the Nasdaq started the month above 50, and as you move below 50, you tend to get a big drop. Right now, it's already looking like that's the case, just as we had discussed. So below 50 for the month on the RSI suggests a big down month, and right now this is looking scary to the downside. And as long as the MACDs continue pointing down month to month, not day to day or week to week, as long as this is the case, that the RSIs and the MACDs are moving to fresh 3-year lows here month to month, it suggests that markets should continue being under downside pressure. And last and least, S&P 500 trading below the previous monthly closing low for 2015, and the level there that S&P 500 is cracking through is 1920.03. This market is now scary in terms of the potential to go lower, and we can see here 3-year lows on the S&P 500 on the monthly, and then we can see here that also we are cracking through here and also cracking through here. So whenever you see markets having this type of formation where they're making 3-year lows on your RSI and MACDs, unfortunately what that means is the chances and the odds are there now for the market to experience something most people would call a crash. So that's the risk, that the more this continues being the case on the monthly, the more this becomes a possibility. We shall see. Eric Mwaded, Mwaded.com. As always, good luck, peace, and blessings. EACS. Enjoy your weekend. I am out. Woo!